really looking forward to the next segment, which is going to wrap up the conference here for us. And we're going to end with a fireside chat with Nicole Kagan. So Nicole Kagan leads Kalshi Research, which is the academic and institutional research arm of Kalshi. And so, of course, we know now Kalshi is the first CFTC-regulated exchange for event contracts. And she also serves on Kalshi's markets team, where she designs and certifies the contracts that power Kalshi's markets. And this spans, as you've heard, everything from macroeconomic data, elections, sports, weather, and culture. And so Nicole and I are going to have what I think is going to be a really, really interesting conversation. And I thank her greatly for being here to talk about Kalshi. Welcome, Nicole.
Hi, thank you so much for having me. Thank you for such a wonderfully kind introduction.
Oh, yeah. Well, it's fantastic to have you here. You have an amazing background, actually. You worked at a hedge fund. You have a really interesting academic background. I think that's really inspiring to students in our audience who are thinking about what's next in fintech and might see you as a role model because you've done some really interesting things. And so
that's very nice.
Yeah. No, it's great to have you here. And we've had a really interesting tour this morning of many of the latest innovations in markets and market structure, from stablecoins to tokenization to prediction markets. And so it's kind of a wonderful capper, actually, to have this conversation with you. And so I started the morning with just noting, and you can probably correct me on what the latest number is, that notional volume on places like Kalshi and prediction markets in general has jumped to something like 25 billion a month or something. It's a huge number and growing really fast. And so it really merits the attention that it's getting. And so we're really happy to have a chance to talk to a true expert like yourself here.
Yeah, it's great to be here. I mean, that's a very generous estimate of our volume. I think we're doing somewhere closer to about 11 billion a month. But hopefully, 2-3 months from now, across all markets, and hopefully 2-3 months from now, we'll be hitting those numbers easily.
Yeah. So maybe kind of an opener for you. What was sort of the moment when you said, hey, I'm really excited about prediction markets and I want to go work at Kalshi?
Yeah, so that's a great question. So just to give you a little bit of context on my background. So I started my career at Bridgewater Associates, where I was a macro investor. And, in my seat at Bridgewater, I would look at all of these emerging markets. I looked at 20 plus emerging markets, and all of them are very different. But I think in trading what I was trading, which at the time was short rates, which is where a policy or an interest rate might be in 3 months, 6 months, or a year, the real thing that I found that I had a view on was the outcome of an election, right? Not actually where the rate would move independently, because there are certain countries that exist in the world today where the central bank is in fact not independent of the government. So Turkey is a great example of that. And really, when you're expressing a view on short rates, you're expressing a view on the electoral outcomes in Turkey in a given year and how that might shift the policy stance of the central bank. The same could be true in countries like Brazil. And so the thing that I was left wondering always when I was a macro investor there was, well, why can't I just trade directly on this? Like, why is there no macro instrument that would let me take a position on the thing that I actually understand and not the thing that really is a step removed, right? Because markets, financial markets, public markets, very noisy, right? There are lots of different things that can drive market behavior, some passive, some active, that make it a little bit more difficult to identify which way it's going to move at any given point in time. And I think that makes it a lot more difficult to take a very clear, robust position. And so back when I was at Bridgewater, I decided, listen, like, this is something that's really interesting. And I think for a while, I didn't really think very much of it. I ended up leaving Bridgewater. I pursued a master's at Oxford. I thought I was going to be a professor of economics. I very quickly realized that I, in fact, did not want to be a professor of economics, that I wanted to go back into industry and work with data. And at the time that I was finishing up my degree, this opportunity at Kalshi came up. And Kalshi, still about a year ago when I joined, was much, much smaller than it is today. But when I heard the pitch, which was, well, you can take direct positions on things like elections, on things like macro rates, on things like topics in culture, I thought, well, that's perfect. This is the idea that I wish had been around when I was still, at an institutional desk. And so that was the big aha moment for me.
Yeah. I mean, I started describing it as kind of everything TAM. And meaning an enormous and unlimited target market of tradable stuff. And maybe one question. So you just gave a really good kind of finance motivated answer that these markets, especially as they deepen, are going to be really interesting places to either place bets, on a trade or hedge things. What's the most surprising market that's traded on Kalshi that you never expected to see?
The most surprising market that is traded on Kalshi. I mean, we now have markets on reality TV outcomes, which I love. And I think that the funny thing is like, there are categories, that on face seem what some people would call frivolous, things like reality TV. But in reality, like there are multi-billion-dollar industries that are built on the back of the results of those shows that shape things like what we care about in culture, what kinds of beauty trends we go and follow as society, what kinds of surgeries we might undertake, because those are the standards that are set for us in society. And so I think that actually they have this very strong point of cultural influence that we don't tend to stop and think about very often. And so it's really cool to have these kinds of categories and these kinds of markets live on our platform to allow people who really do care about it to trade on it.
Yeah, I think that's an interesting distinction. And, there's lots of things being traded there, from things with economic underpinnings to, as you just described, things that are more cultural moments or whatever. Could you share a little bit with us the research you guys do on, how to navigate the regulatory environment and what contracts are going to be okay or not okay or whatever, and how you think about the form of regulation and what that should be. So especially with your economics background, I think that might be interesting for people to hear.
Yeah, absolutely. And so I think as a baseline, it's worth outlining that we are a DCM. We're regulated by the CFTC, as you mentioned earlier. So we are a formally federally registered and licensed derivatives exchange, which means that we operate within the constraints of what the CFTC allows us to do. And so if you go to the CFTC website, you'll see that under the CEA, the Commodities Exchange Act, there are certain categories that we are restricted from listing that are subject to additional review. So these are categories like war, death, assassination, gaming, things that are illegal under state and federal law. And what you'll find, and I think a big point of difference between us and other platforms that are offshore but often also grouped in with us, is that we don't offer those markets because we're structurally barred from offering those markets. So I think at a very high level, the regulatory landscape, I think, is quite fair. It's pretty open with exceptional carve-outs for things that would be clearly detrimental to society, I think, for us to list at this point in time.
And how do you see the kind of the nature of these categories evolving? Like right now, it's evolving where there's a lot of sports betting. And is that something that you see continuing, or as this expands to other types of categories? And maybe talk a little bit about some of the professional investors that are coming there, especially market makers that are maybe going to change the landscape.
Yeah, absolutely. And so I think, as Kalshi has grown, the interest in different types of markets has changed. And so, a year ago, we were having the same conversation that we're having about sports, in fact, about economics, right? Like that was a particularly dominant category for us. And so I think on one hand, there's an element of cyclicality here. When a large election happens, when a big economic release happens, when a large displacement happens, that's something, or a large dislocation somewhere in the political or economic sphere happens, people look to Kalshi for answers about that. So for instance, our market on the next Fed chair has about $200 million of volume on it, because that's something that people are interested in. And so I think sports, by that token, is something that people are naturally very interested in. And it makes a lot of sense. It's a multi-billion-dollar industry. People care a lot about the teams that come from their home cities. There's a tremendous amount of economic impact that comes from that. And so I think that right now, especially with big sporting events that are happening, like the Super Bowl, like the Olympics, like the NBA season, the collegiate season about to start, I think these are all just points of focus and attention that captivate America anyway, right? Regardless of whether they're on our platform or not. So it makes sense for us to list them. As we gain more institutional traction, I would expect personally that we see a lot of movement in our economic and financial markets, but also in other markets. Like we have markets on mentions, which I think is one of our more interesting categories, where we will set up strikes for what people will say in a given speech or an address. And you can imagine, if you're an equity analyst, you're listening to an earnings call, you might actually really want to hedge out your risk for a company executive saying something that is going to potentially have some impact on the success of that company going forward. And so I think
I fear that you might have been quite scripted then in this conversation if there's people maybe betting on what you're saying.
Oh my God, no.
That was a light note. That was a light note.
No. No. But what I'll say there is, as we gain this institutional traction, we already have some large market makers on our platform. We have Susquehanna, we have Jump Trading. We're always expanding to more. And I think that we're gaining platforms of distribution as we go along. And as this volume snowballs for us, I think that we'll see potentially a shift back to more traditional categories, but maybe in a more experimental way for the analysts that have traditionally represented those categories and traded in them.
Yeah. I think it was interesting that you characterized the mention thing actually as a way of kind of hedging against an earnings disappointment, a new way of doing that as an example. And it really did catch my attention that folks like Susquehanna are there, and obviously they have
Hmm.
bets, viewpoints to express, and this is one way of doing that and creating
Right.
liquidity and creating liquidity and stuff. And I imagine also you're accumulating a lot of really interesting data about the quality of these predictions, and it's turning out to be
Hmm.
they're turning out to be pretty interesting. So could you share some insights about that, about how accurate the predictions are on Kalshi?
Yes, so this is something, so Kalshi Research, just for some background, is an academic and institutional research arm that we started at Kalshi back in December last year. And so it's still relatively new. That said, the early data on calibration and accuracy is looking really, really good for us. So we know, for instance, that our calibration by Brier score is world leading. We know that across all of the markets, when we do the analysis of how well calibrated they come across exceptionally well. We're not quite a perfect oracle, but we're pretty close. And I think that there's something very special in there. I think we're seeing a real-time manifestation of the wisdom of the crowds. And, there are tools that have been built by third parties, like Calibration City, for example, that showcase our calibration at market midpoint and at various market stages, alongside our own research that we've published, both in our own first research study that looks at our calibration and our accuracy relative to consensus. And then also, of course, validated by a recent Fed paper that found the same thing. So the information value of Kalshi markets and also their accuracy relative to consensus, with Kalshi markets coming out on top. So there is definitely more research to be done there, and there'll be a lot put out on our front about that, of course, too. But I think the external research is saying good things.
Yeah, because I think that this was kind of the hope for outcome for prediction markets, which were pretty widely studied over many years, but never really realized because the regulatory environment didn't support them. And I guess the hope always was that this wisdom of crowds would hold true. Maybe one question around that is that wisdom of crowds rests on a couple assumptions. And, one of the biggies is that people's observations are independent of each other. So that's how you get to the accurate guess of how many jelly beans in the jar, or the accurate prediction
Yes.
on Kalshi. And so how do you guys think about that in terms of what information folks are relying on to make their bets, and how do we ensure that that diversity of viewpoints is really getting expressed?
Well, so I think to start this conversation, it's worth talking about the incentives of the participation in a prediction market, right? Like ultimately, your incentive is to be right. It's not to look good. And I think this is one of the main points of difference between us and consensus estimates, right? Because of course, like if you're a professional forecaster, there are reputational risks that a company stepping out of line. You might eventually be right, but at that moment, you might not want to step out of line to say something that is going to be controversial or so different from your peers. And so I think that the fundamental incentive structure underlying a prediction market like ours is just very different. The second thing to say there is, and this will be a forthcoming release to preview from the Kalshi research perspective, is we've actually been looking into this. So, what level of liquidity do you need in a market to get a calibration that is really good? What level, how many traders do you need in that market to have some kind of reliable outcome? And I think the reality is actually the numbers are pretty small, right? Like we're talking about the thousands to the low tens of thousands of dollars, depending on the category. We're talking about, within the tens, if not the single digits of traders participating in those markets. And I think part of that also goes back to this incentive construction piece, right? Which by nature just differentiates the market from other ways that we have of proxying what is going to happen in the future.
So you're describing a situation where there's a lot of small bets leading to this wisdom of crowds outcome.
Yeah, I think that it's definitely plausible to say that there is a world in which, and of course this is an active investigation that we're undertaking, but I think that the early flags to us show that even in low liquidity markets, you can have decently high calibration and rates of accuracy and prediction. And I think that is really a byproduct of incentive construction.
Okay, I think this was kind of a core element of earlier hopes, actually, that when people had to put money down, they tend to be more correct in aggregate. So yeah, that makes a lot of sense.
Yes.
I wonder if you could walk us through, because the previous speaker kind of explained how a bet works on a prediction market, and I'm wondering if you could actually help us also just to understand the whole process. So there's the bet, but there's also the liquidity underneath. There's the settlement. So talk a little bit about how all that works, and maybe some things you guys think about how to make this all work successfully in the future.
Yeah, absolutely. So let me run you through the process of kind of the end to end of a market. going live, being traded, and what that is like from our perspective and also from a trader's perspective. So from our perspective, in terms of the germination of a market, we have lots of ideas come from a variety of different sources that inform what we might list a market on. We then take those ideas and we think about whether we already have some kind of contract in place that will account for them or whether we need to write a new one. And by contract, what I mean is every market on Kalshi has a set of rules that underlie that market that define how it pays out, when it pays out, and what would be considered to trigger that payout condition. And so sometimes we have, generic contracts that will fit many different things. So for instance, like, will a person win an award at an awards show? But sometimes, we come up with some novel idea, something new happens in the world, we have to develop something. That then gets taken from our perspective once we write these rules and self-certified with the CFTC, and then it goes live. When it goes live, we think a lot about the way that we can frame markets to make them interesting to people. We think a lot about the kinds of things that the participants in our markets care about. So these are, what are the most topically relevant political events that are happening? What are the most topically relevant economic events that are happening? Where are people paying attention? And we take those ideas back. And as a market participant, what you'll see is the market will go live. Usually there is some liquidity sewn into the market by our market making partners. And then you can trade on that market the same way that you would trade on an equity market. So there's an order book and you place trades through an order book. And in the same way that in an equity market, you would kind of, feed up the order book, feed down the order book, depending on which direction you're buying or selling in, you're going to transact at a certain price. And then at any point between that point and when that market ends up closing or when that event happens or finishes, you can sell in and out of that position.
Makes sense. Yeah, no, that's quite clear. So it's quite a careful calibration to figure out the source of data that you're going to use to close out the contract.
Exactly. And so these, and by the way, so on the source agency piece, we usually define them when we certify this contract with, we self-certify this contract with the CFTC. We have a list of source agencies that are always defined in advance. Mm-hmm. And certainly when the market is listed, we define the source agencies that we will use for resolution. And I think that that's really important for market integrity from our perspective too.
Yeah. I mean, I think this is a key thing because there's a lot of talk right now about, exactly how they all function, but also mm-hmm. who is trading on there and what information they're relying upon and things like that. So how do you, on the market integrity point, how do you guys sort of police things and oversee? You have a panopticon of what everybody's doing, but how do you oversee that? And what actions do you take when you see something that doesn't look right?
Absolutely. Yeah. So we take insider trading very seriously. And I think that we're privileged in that, of course, we're a federally licensed exchange. And I think that the point of difference there is that we have KYC information on everybody that is using our platform, right? So we know who our users are. And there are two levels here. So every market will come with a set of trading prohibitions where we will enumerate the categories of people that are not allowed to trade in those markets. So for example, if we have a sports contract, if you're on a team that is participating in an event, obviously you can't trade on that event. We know who you are, right? And for sports in particular, we have surveillance partners that all of the sports books actually also use that we've seen be very successful in catching this kind of behavior recently across the leagues. We've seen all of that in the news over the past few months. From our perspective, we have an extremely well-calibrated, very sensitive surveillance system that flags occurrences to our surveillance team that goes and reviews them. In terms of what we then do with that information, so part of this, of course, is a confidential process that I can't reveal the consequence of, but there are penalties that we're able to enforce. So there are fines that we're able to enact. There are referrals to judicial proceedings that we're able to follow up with. And these are things that we have pursued. And in fact, I think last week or the week prior, we made a public statement about 2 traders that we saw anomalous activity from that we did end up taking action against. But of course, there are many more that the public is not going to hear about.
Yeah, of course. Do you guys impose things like trading limits on folks and as a function of what types of things they're trading, or how does that all work?
So we have position accountability limits on all of our markets. On most markets, that position accountability limit is $25,000. But as it comes to market moving behavior or insider trading, of course, if somebody is taking a very clear directional position that is very large, that is going to be flagged by our surveillance system. It's something that we're going to investigate.
Yeah, that makes sense. I'm wondering if you've seen some and I'm not talking about things that you would discourage. I'm talking about more creative ways you've seen people use Kalshi, and especially drawing on your hedge fund background. If you were back in hedge fund days, what would you wanting to do what would you want to be doing on Kalshi?
What would I want to be doing on Kalshi? Well, so I think that our politics categories are really robust.
Mhm.
And so I think what I would want to look at is what is the probabilistic estimate of an event actually happening, right? And I think this market implied estimate is really, really powerful because we have it across a range of things. So things like tariff implementation,
Mhm.
rates of tariffs, whether tariffs will be repealed at some point in time,
Mhm.
in addition to whether they will be brought up. Because of course, politicians in many countries say many things and then they don't do them.
Mhm.
And so I think that what prediction markets uniquely add is they add this credibility layer. And I actually think that that's one of the most valuable things that they offer. They add this credibility layer on top of whatever we're seeing in news. So they have this ultimate filter that they put on and that is market based, right? So you have a broad base of participants weighing that information. And the reason I think that's particularly powerful is traditionally in finance, you're receiving some kind of research from a few analysts that work at different kinds of banks, right? Sometimes you have political consulting firms, but at the end of the day, you're talking really to like 2 or 3 junior analysts at each of these institutions. And you
Yeah.
hope that they know what they're talking about. But realistically, like a lot of this, in the nicest possible way, is like finger in the wind analysis. And so I think that having a market based estimate to corroborate that with is a really, really powerful thing to have on your side.
Yeah, I was gonna maybe pick up on that. And I think one of the concerns about investors is there's heightened geopolitical risk around the world, and so the
Yes.
traditional ways of risk management were you look at the past, you find familiar settings, and you kind of project it to the future, kind of typical
Mhm.
risk analysis. But you need to increase the component that you might place on uncertainty or doing scenarios. And I'm wondering if you've seen anybody kind of start to build scenarios. So it's combinations of these bets that you just described, especially on economic or geopolitical things that might together create a certain scenario that they might want to place a bet on.
Yeah, absolutely. I mean, I think people express their worldviews in different ways using our markets. Sometimes they'll combine markets. Sometimes they'll take multiple positions in a single market. I think that the really cool thing about prediction markets is that they do allow you to bundle markets that suit your worldview. So in this case, if you think that
Mm-hmm.
there's heightened geopolitical risk, you can take a position on inflation, on GDP, on unemployment. And by the way, many of these aren't actually tradable indicators that we have right now. So for example, something like unemployment, right, is a report that comes out that informs your estimates of other tradable financial instruments, but traditionally has been harder to trade in and of itself. And so I think that you might express this macro worldview across not only this economic domain, but also this political domain. And so you can imagine inflation goes up. Also, you might have a position on whether tariffs will be implemented and when they'll be implemented, and you can start to combine them. And we are seeing that come through. In fact, I think like one of the more interesting institutional use cases that we've had on our platform is there's a company called Arrived that actually would take a position on how long the government shutdown would last because they realized that, of course, like the longer it went on, the more of a cost it imposed. And so they wanted to hedge out any risk that was going to come from, the closure of basically all the federal agencies. And so I think we are beginning to see that kind of behavior on our platform. I think that that's really encouraging. It's honestly really cool to see these diverse worldviews be expressed.
Yeah, so you're actually kind of expanding into other areas. So we have these kind of financial use cases that you've clearly articulated and really drawing on your background from. But then there's many other potential use cases here, like corporate strategy or which projects to fund with your research and development. Are you seeing any of those kinds of interesting new applications?
Yes, that's right. So one thing that I think is interesting is we don't offer markets on earnings strictly defined,
Mm-hmm.
but we might offer a market on something like Tesla deliveries. And when you're an analyst, right, when you're adjudicating a company structure or its success, you actually probably have a view on the KPIs of the company more so than
Mm-hmm.
you have a view on the stock price of the company. Because as we said earlier, the stock price can be very noisy in the way that it moves. You might be, right on the KPIs and wrong on the way that the stock price moves on any given day. And so it allows you to get this direct exposure to the things that you actually care the most about. And that applies across industry. So this is true of tech and their KPIs, but this is also potentially true of new markets that we're looking at launching in, say the biotech space when we're talking about clinical trials and the success of those trials, the failure of those trials, FDA approvals or disapprovals, or things like epidemic, pandemic cases, measles, all of these kinds of things form part of a world view or a reality of the world that people have to hedge out the risk of.
Yeah, no, it's kind of when you start thinking about it, it does expand.
Yes.
So yeah, yeah. So how about sort of where will Kalshi be in 5 years? It's growing so fast. What's that ambitious vision that you guys have for the future of this company?
Look, I mean, I think the way that Tarek and Luana have articulated this in the past is that we would like to be the everything exchange. You know, we want to be the place where people take their ideas, where people are able to, from a market-based position, express their worldviews, and have those contentions expressed through a market basis as opposed to any other. And I think that there is a reality in which that happens, and I think that that's a really exciting one.
Yeah, I mean, yes, definitely. And then we got to bring up AI because it's a hot topic, and I'm sure you're seeing
Yes.
it and using it. And I'm wondering if you just articulate
Yes.
a little bit about both. Like, how are people using AI on the platform, and then how are you guys thinking about it internally?
Well, internally, I mean, I think AI is making us more productive, right? Like most workplaces, I think it gets rid of a lot of the tedious menial tasks that we would otherwise be bogged down in doing and lets us focus on accelerating. And I think that, Kalshi is now an $11 billion company, but we have fewer than 200 employees. And I think that that's quite rare. And I think that part of that, of course, is enabled by advances in technology that allow us to do our job better than we were able to do it a few years ago. And then in terms of how people are using AI, I mean, there are different test grounds that have been started by different organizations, by different labs around the US, both academic and institutional, that have looked into AI agents actually trading on Kalshi on behalf of users and advising on markets. And I think that our traders are really creative. We see them develop lots of really cool things every week. One of the coolest that I've recently seen is, an AI screener on top of any market that tells you whether that probability estimate makes sense and breaking down why we might see it the way that it is. And I think we'll see more use cases as the technology develops too.
That's super, super interesting.
Yeah.
So maybe just like broaden it out in the last few minutes we have here
Mm-hmm.
together.
Mm-hmm.
And what do you think or what do you want people to understand about Kalshi that we haven't touched on so far? Like, do we miss anything in this conversation? And what would you like to share with our audience?
I mean, I think that there are probably three things, right? The first thing is we are a federally regulated derivatives exchange, right? We are a formally federally licensed derivatives exchange, and that regulatory background is really important, right? That means that we act within institutional rules. We don't list markets on prohibited or restricted categories, that we're very, very careful to do the right thing by the regulators and by our users. And so I think that there's a substantial amount of institutional protection and trust that comes from having that background and always having sought the regulated path into what we're doing. The second thing is that we take insider trading very seriously. Insider trading, candidly, of course, is a risk in all financial markets, right? It's something that the SEC deals with, the CFTC deals with. The CFTC is a large and robust industry body, and we work in partnership with our regulators to make sure that we're policing insider trading, that we're creating rules. And then the third thing is, prediction markets aren't new. Like the expression of your thoughts in this way is not something that Kalshi invented, though. Of course, we did take it to the logical extreme of becoming a licensed derivatives exchange that offers it. But in fact, these kinds of contracts have been around for hundreds of years. They've been the way that people have resolved disputes and their views in markets for a very, very long time. And now is really when we're seeing the extension of that into becoming realizable financial instruments that people are able to trade. So I think those are the big three things.
Yeah, no, I think that's a wonderful note to end on. And I want to thank you for being here because I'm sure you're very busy doing all these exciting things.
Mm-hmm.
And I think I see a great future ahead for you in the business because there's going to be so many exciting research projects that you can imagine from this cool new area. So thank you for being here. It was an amazing discussion. I really appreciate it. We covered so much ground,
Yeah.
and you're absolutely a great guest. So really, really terrific to have you here. Thank you.
Thank you so much. Thank you for having me.
Great, of course. Thank you all for being here. And I hope you have seen Fintech continues to be at the forefront of technology innovation and development around the world and creating many opportunities and challenges. I trust you enjoyed today's sessions, which provided an amazing mix of critical insights, pragmatic advice, and inspiring wisdom. And to close the session, I want to thank our speakers, including those who came from quite far away and traveled in this environment. And so I want to thank all of our speakers, our audience, our donor, and I also want to give a special shout out to Ruby, without whom this conference would not be possible, and to our tech team at NYU. So thank you all very much. With that, I want to wish you all good luck in your fintech future. Thanks for being with us today.